Hey folks, listen up. Today we're diving headfirst into the exhilarating world of small cap stocks, and we'll be reviewing 5 small cap stocks with big potential in 2025. But first things first, a little disclaimer. The information we're sharing today is for educational purposes only and shouldn't be considered financial advice. Always do your own research and consult with a professional before making any investment decisions. Remember to subscribe to our channel so that you're the first to know when we release a new video. Now, let's talk small caps. These are companies with a market capitalization typically ranging from $300 million to $2 billion. They're the up-and-comers, the disruptors, the ones with the potential to become the next big thing. And that's where the excitement lies. Small caps are often characterized by their agility, innovation, and hunger for growth. They have the potential to outperform their larger counterparts, offering investors the chance to ride the wave of their success. But remember, with higher potential returns comes higher risk. Small caps can be more volatile and less liquid than large cap stocks. Our first contender is Enphase Energy, ENPH, a hidden gem in the solar energy industry. They've been quietly building a solid foundation, focusing on microinverter technology, which is their unique selling proposition. Their recent performance has been nothing short of impressive, with a revenue growth of 50% year over year and profit margins expanding significantly. But here's the kicker, folks. Enphase Energy is still relatively undervalued by the market. Their current market cap of $8.6 billion suggests there's significant room for growth. They're expanding their operations into new markets, including Europe and Asia, which could be a game changer. Now, I know some of you might be thinking that this sounds too good to be true. And you know what? You're right to be cautious. That's why we do our homework. Look at their management team, their track record, their financials. Are they investing in research and development? Are they gaining market share? These are all crucial factors to consider. Enphase Energy might not be a household name yet, but they're definitely one to watch. They have the potential to be a 10-bagger, a stock that could increase in value tenfold. But remember, folks, this is not a guarantee. It's about identifying potential, doing your due diligence, and then having the conviction to hold on for the long ride. Next up, we have Axon Enterprise, a true innovator in the law enforcement technology space. They're disrupting the status quo with their body cameras, taser devices, and cloud-based evidence management software. This isn't your grandpa's law enforcement company, folks. Axon is at the forefront of integrating AI and machine learning into their products. They're not just keeping up with the times, they're shaping the future of the industry. And the market is taking notice. Their stock has been on a tear lately, and for good reason. They're growing at a breakneck pace, snapping up market share and attracting top talent. They're firing on all cylinders. But it's not just about hype, folks. Look at their financials. Their revenue is soaring, their margins are expanding, and they're generating strong cash flow. These are all signs of a healthy, growing business. Of course, investing in a company like Axon comes with its own set of risks. They're operating in a rapidly evolving industry, and competition is fierce. But if they can continue to innovate and execute on their vision, Axon has the potential to be a massive winner for investors. This is a company that could change the world, and I, for one, am excited to see what they do next. Let's turn our attention to AppHarvest, a company that's been a steady performer for years. They've built a strong reputation in the agriculture technology industry, known for their innovative approach to sustainable farming. But don't let their long history fool you, folks. AppHarvest is not content to rest on their laurels. They're making smart, strategic moves to position themselves for continued growth in the years to come. They've been investing heavily in research and development, expanding into new markets, and even making strategic acquisitions to bolster their portfolio. They're adapting to the changing industry landscape and staying ahead of the curve. Now, you may be wondering, is it too late to get in on this one? And that's a fair question. AppHarvest's stock price has already seen significant appreciation over the years. But here's the thing, their growth story is far from over. They have a proven track record of success, a solid financial position, and a clear vision for the future. They're not going to double overnight, but they offer investors a chance to participate in the steady, sustainable growth of a well-established company. And in this market, that's nothing to sneeze at. Now, let's talk about Matterport, ticker MTTR, a company that's perfectly positioned to capitalize on some major industry tailwinds. The spatial data industry is undergoing a period of significant growth and transformation, and Matterport is at the forefront of this revolution. They're leveraging their 3D capture technology and vast spatial data library to gain market share and establish themselves as a dominant player in this rapidly evolving landscape. Think about it, folks. The rise of virtual tours, digital twins, and the increasing demand for accurate spatial data are driving growth in the industry. These are massive trends that are only going to accelerate in the coming years. And who's best positioned to benefit? You guessed it, Matterport. They have the right products, the right team, and the right strategy to ride this wave of growth. Now, I know some of you might be thinking that this all sounds a bit risky. What if these trends don't pan out? And that's a valid concern. Investing in a company like Matterport requires a certain appetite for risk. But here's the thing, the potential rewards are enormous. If Matterport can execute on their vision and capitalize on these industry tailwinds, their stock price could skyrocket. This is a company that's not afraid to disrupt the status quo and push the boundaries of innovation. They're playing to win, and that's the kind of company I want in my portfolio. Let's dive into another small cap gem, Celsius Holdings, ticker CELH. This company has shown remarkable growth potential thanks to its innovative energy drinks. Celsius Holdings has carved out a unique niche in the health and wellness market, offering healthier alternatives to traditional energy drinks. Their focus on health-conscious consumers has led to a surge in sales and an expanding market share. As a small-cap stock, Celsius Holdings presents high growth opportunities for investors eager to capitalize on the growing demand for health-conscious beverages. With a robust brand presence and a commitment to continual innovation, Celsius Holdings is well-positioned to continue its upward trajectory in the small-cap space. Their dedication to disrupting the traditional energy drink market and providing healthier options makes them a compelling addition to any forward-thinking investment portfolio. There you have it, folks. 5 small-cap companies with the potential to deliver explosive growth. Remember, investing in small caps is not for the faint of heart. It requires patience, discipline, and a willingness to stomach some volatility. But for those who are willing to do their homework and ride out the ups and downs, the rewards can be substantial. These are the companies that could be the next Apple, the next Amazon, the next big thing. So stay informed, stay focused, and never underestimate the power of small cap stocks. Remember, investing in small cap stocks requires thorough research and a willingness to ride out volatility. If you liked this video, we bet that you will like the 2 videos now appearing on the screen. Go ahead and click on one of them now to continue your exciting investment journey. We'll see you in the next video.